Welcome to Herd Mentality, a podcast from StoneX where we discuss global dairy markets and what's driving them. Remember that the trading of derivatives such as futures, options, and over-the-counter products or swaps may not be suitable for all investors. Derivatives trading involves substantial risk of loss, and past results are not necessarily indicative of future results. We're recording this July 26th. And with me is Charlie Hyland. He's head of EMEA Dairy for StoneX. Charlie, give us a little bit of your background.
Hi, Nate. Delighted to be on. So I'm with StoneX now since about 2009. Prior to that, I was a treasury trader with a bank. But I've been involved with the building up the team here in Europe, along with the rest of the group, and really concentrating on trying to build out and develop the dairy markets over the last 15 years or so. So we've come from a market where there were trading annually in dairy was zero to now where we've got a reasonably well developed market, and one which we'll talk about today, but I feel is on the cusp of really making another substantial move forward.
Yeah, the growth in hedging and risk management instruments in Europe has really been impressive, I think, especially in the last 10 years. And building on that, the EEX is changing the way that they're going to settle, or the specifications for their liquid milk futures contract. Can you give us a little bit of background about how the current contract settles and the changes that they're making?
Absolutely, yeah. So EEX have been really conscious that in order to build a really well functioning dairy derivatives market in Europe, we need to solve the challenge around having a good contract for liquid milk. So the first stab of that was basically done back in 2018, where they launched the EEX liquid milk contract, which was essentially designed as a basket milk price linking to the average of the German, Dutch, Danish, and Irish milk prices. Basically taking the average of the monthly prices, which are published by the EU Commission's Milk Market Observatory, and using that as a final settlement price. In reality, that has not been successful. The market basically hasn't taken to it at all, and a couple of reasons. I think the first is that the actual baskets of countries being included there aren't really something that's used in any real way in terms of indexation in the physical market. And as well as that, the biggest problem really has been the fact that the milk contract was non-standardized. So essentially, when you're trading a contract, the hedgers didn't ultimately know what the final settlement solids would be in that contract. So it made it really hard to get a firm grasp on what you're actually trading. So as a result, it just didn't trade at all. Now, in the meantime, I guess we've also been working with the industry and trying to find a better solution. And what we started to trade, StoneX started trading the OTC markets back around 2020 or so, was actually just using the German milk price, but using a standardized 4% fat, 3.4% protein standardized milk, which is basically published by the German Federal Agency for Agriculture and Food. The reason we started using this is because, well, one, the standardized components made it much easier to understand what you're ultimately trading. And also that the industry for a long time certain segments of the industry have been using this to index link reasonably large quantities of physical contracts. So as a result, when we launched this, it started to trade pretty much straight away. And actually, we've seen a very major acceleration.
Just to break in,
Sure.
When you say we launched it, you say when we launched the OTC contract that settles to the German price.
Correct. So we launched the OTC contract back in 2020, and actually we launched options on it last year as well. So we're now trading significant quantities of swaps and options linked to this German milk price. We've been advising or talking with EEX on this as well, as the markets have been growing, and suggesting and working with them on looking at ideas to potentially change the existing contract, which they've just announced this week that they're going to do.
That's good news. And they've been good partners with the industry, changing specifications on some of the other dairy contracts to match the way that dairy's traded in the physical markets. Um, so what's the benefit? We've had this OTC contract for 3.5 years now. What do you think the benefit to the industry is to offering it as a exchange listed futures contract?
A couple of a couple of benefits really. I think one, I mean, for really for the markets to fully evolve, I think having a futures contract there, trading in a very transparent, visible way, just improves awareness around how these markets are developing. It also improves awareness within the industry and even the sections of the industry who aren't actively trading in the OTC market around where the forward curve is for the likes of liquid milk. And this is helping, I think, in general, those who are on the sidelines to participate more. And it just helps, it's just healthy in general for the overall development of the markets from that perspective.
It's interesting the way the European market has developed. Here in the US, our major contract, the one with the most open interest, the most liquidity, is class three milk. It's a liquid milk specification or product. And really, Europe went the other direction, starting with butter and skim milk powder, and then adding in dry whey and now cheese, or at least cheese OTC right now. And now they're developing a more useful liquid milk contract to go along with those physical products. Does that open up opportunities to trade between the physical products and the liquid milk contract now?
Definitely, yeah. I mean, I think that's I mentioned it was it growing really rapidly. I mean, the BLE milk has we launched it essentially 10 years after butter and skim on the OTC side, and it's by far the fastest growing at the moment. And we're seeing it's now the third biggest contract that we trade in the dairy space after the skim milk powder and butter, but it's closing the gap very quickly. And actually, when you look at the how that contract is trading and who's trading it, the good thing about it from our perspective is there's multiple different companies, structures, strategies which are going on. You have obviously big end users, multinationals who are trading on the buy side. You have a lot of the dairy processors and co-ops trading on the sell side. You have farmer programs linked to it, and now more and more you're seeing that arbitrage happen, right? Where people are looking at the correlations between milk prices and butter and skim milk powder, or milk price and cheese and whey, and they're trading those relationships. So the physical traders in particular are quite active on these type of things, and this is really healthy. And I think when you look at overall development of a market, what we want to see is we want to see multiple people trading contracts for multiple different strategies, because that means we have a much more dynamic market, and naturally liquidity can evolve from there. And I think we talk a lot in the commodity space of, if you look at the really successful long-term contracts, whether it be grains or sugar or coffee, cocoa, energy, you tend to have a very long lead in time where products and contracts are growing quite well. And then there's almost a tipping point where you see a real acceleration in growth, and it's kind of a hockey stick type thing. And what we're seeing at the moment from a European dairy, we believe, is that, right, where we've had this 10, 15 years of growth now, which has been pretty good. We're growing. We were growing at 20 odd percent. We're now growing at 30, 40% a year in terms of combined futures and OTC markets. And the more acceleration we see in these type of arbitrage trades, we feel, and we are already seeing, that growth is really going to continue to accelerate quite quickly, and really make these markets significantly more liquid than they have been historically.
Yeah, we see that in the U.S. at arbitrage, where the dairy farmer is the natural seller of milk. You have end users, restaurants, etc., that are natural buyers of products like butter or cheese. And then you kind of have a speculator that sits in between there, buying the milk from the farmer and selling the dairy products to the end users. So it definitely opens up more liquidity. It brings in the natural sellers. I know that there's a number of forward contracting programs for dairy farmers that are operated in Europe. And in the past, they've needed to hedge those positions using the butter and skim. Do you think they're going to be using the BLE, the liquid milk futures, moving forward?
Yeah, it's a great point because I think when I mentioned a little bit earlier around the fact that there's awareness around this forward price really helps support the development of this natural interest from farmers to hedge. So when you look at, I think a big difference between the U.S. market and the European market is, from a farmer's perspective at least, is the scale and size of the farmers, right? So Europe, as you know, is dominated by much smaller farms, significantly smaller farms in the US. So most of them struggle to hedge independently because they don't have the scale to do it, especially when we were dealing only with an OTC market. So what's been done for farmers who were able to hedge was that they were doing it through their processor and sorry, our co-op, who were essentially offering forward contracting programs, essentially showing them fixed prices for milk, and then the farmer would decide essentially whether to hedge that or not. So historically, because butter and skim were are the most actively traded contracts here, they were forming the base for most of those contracts. So that was limiting to some degree, because if you weren't a producer of butter and skim milk powder, you had some challenges there around, not a perfect match for what you're hedging versus the exposure. And also on average, butter and skim as a stream return has been historically one of the lower returning streams. So what you've seen in the last maybe 18 months or so has been a shift towards more of the dairies who are offering these programs linking to BLE. And that's been very positive for a number of reasons. One, it's been enabling some processors offer these programs who weren't able to historically. And at the same time, because on average the return on liquid milk has been higher than the return on the butter and skim equivalent, they've been offering higher prices to farmers, and as a result, take up of those programs have been better than the butter and skim equivalent. So really positive developments, and I think that's going to continue to bring in that really critical sell side into the market to further support liquidity.
Sounds good all around. Was there anything else you wanted to touch on or mention around the contract?
No, I think in general, look, as I kind of mentioned earlier, I really think this has been a major step forward for the industry. I just applaud EEX for doing it. They stay very close to the market and have been listening closely to what people have been saying and asking. So I think this is going to be a great thing, and I just think overall it really improves the structure of the market and the ability for hedgers throughout the supply chain to run their business more effectively.
Absolutely. Thank you for your time today, Charlie.
My pleasure, Nate. Thanks so much for everything, and I'll talk again soon.
The StoneX Dairy team spans the US, EU, Asia, and Oceania, providing market intelligence, analysis, and forecasts through our interactive data platform called StoneX Plus, as well as full-service brokerage on the major dairy exchanges, the CME, EEX, and SGX. If you're interested in finding out more about our market intelligence or brokerage services, you can find more information on stonex.com.
This communication is issued in the European Economic Area by StoneX Financial Europe SA, SFE by the SFE presenters noted. StoneX is the trade name used by StoneX Group Inc. and all its associated entities and subsidiaries. StoneX Group Inc. companies provide financial services worldwide through its subsidiaries, including physical commodities, securities, exchange traded and over-the-counter under derivatives, risk management, global payments, and foreign exchange products in accordance with applicable law in the jurisdictions where services are provided. References to certain over-the-counter ROTCA products or swaps are made on behalf of StoneX Markets, LLC SXM, a member of the National Futures Association NFA and provisionally registered with the U.S. Commodity Futures Trading Commission CFTC as a swap dealer. SXM products are designed only for individuals or firms who qualify under CFTC rules as an eligible contract participant (ECPAT) and who have been accepted as customers of SXM. Wealth management is offered through SA Stone Wealth Management Inc., member FINRA/SIPC, and SA Stone Investment Advisors Inc., and SEC registered investment advisor, both wholly owned subsidiaries of StoneX Group Inc. StoneX Financial Limited SFL is registered in England and Wales. Company No. 5,616,500. 586. SFL is authorized and regulated by the Financial Conduct Authority registration number FRN 446717 to provide to professional and eligible customers including arrangement, execution and, where required, clearing derivative transactions in exchange-traded futures and options. SFL is also authorized to engage in the arrangement and execution of transactions in certain OTC products, certain securities trading, precious metals trading and payment services to eligible customers. SFL is authorized regulated by the Financial Conduct Authority under the Payment Services Regulations 2017 for the provision of payment services. SFL is a Category 1 ring dealing member of the London Metal Exchange. In addition, SFL also engages in other physically delivered commodities business and other general business activities which are unregulated and not required to be authorized by the Financial Conduct Authority. StoneX Financial Europe SA. SFE is a securities trading firm registered in the Grand Duchy of Luxembourg under Company No. RC Lux B 10821. SFE is authorized by the Luxembourg Ministry of Finance and regulated by the Commission de Surveillance du Secteur Financier registration No. P00000-012 to carry out, inter alia, the activities of investment advisor, portfolio manager, professional acting on own account, broker in financial instruments, and commission agent. StoneX Financial T. Limited Co. Reg. No. 201130598R SFP holds a capital market services license and is regulated by Monetary Authority of Singapore, IMASIB for dealing in exchange-traded derivatives contracts, OTC derivatives contracts and spot foreign exchange contracts for the purposes of leveraged foreign exchange trading. StoneX Financial HK Limited C. No. BCQ 152 SHK is regulated by the Hong Kong Securities and Futures Commission for dealing in futures contracts. StoneX Group Inc. acts as agent for SFL in New York with respect to its payment services business. StoneX Financial T. Limited acts as agent for SFL in Singapore with respect to its payment services business. The information herein is not a recommendation to trade nor investment research or an offer to buy or sell any derivative or security. It does not take into account your particular investment objectives, financial situation, or needs and does not create a binding obligation on any of the StoneX Group Inc. of companies to enter into any transaction with you. You are advised to perform an independent investigation of any transaction to determine whether any transaction is suitable for you. This material should be construed as the solicitation of an account, order, and/or services provided by the FCM division of StoneX Financial Inc., SFID NFAID 0476094 or StoneX Markets LLC SXM NFAID 0449652 and represents the opinions and viewpoints of the individual authors or presenters and does not necessarily reflect the viewpoints of SFI or SXM. It does not constitute an individualized recommendation or take into account the particular trading objectives, financial situations, or needs of individual customers. Additionally, this material should not be construed as research material. The trading of derivatives such as futures, options, and over-the-counter OC products or swaps may not be suitable for all investors. Derivatives trading involves substantial risk of loss, and you should fully understand the risks prior to trading. Past results are not necessarily indicative of future results. All references to and discussion of OTC products or swaps are made solely on behalf of SXM. All references to futures and options on futures trading are made solely on behalf of SFI. SXM products are intended to be traded only by individuals or firms who qualify under CFTC rules as an eligible contract participant ECPA and who have been accepted as customers of SXM. SFI and SXM are not responsible for any redistribution of this material by third parties or any trading decisions taken by persons not intended to view this material. Information contained herein was obtained from sources believed to be reliable, but is not guaranteed as to its accuracy. Contact designated personnel from SFI or SXM for specific trading advice to meet your trading preferences. SFP may distribute analysis/report produced by its respective foreign affiliates within the StoneX Group of companies pursuant to an arrangement under Regulation 32C of the Financial Advisors Regulations. The analysis/report is only permitted to be distributed in Singapore to a person who is an accredited investor, expert investor, or an institutional investor as defined under Section 4A of the Securities Futures Act Singapore. Recipients should contact SFP at 656309100 for any matters arising from, or in connection with, the analysis or report distributed. StoneX Financial Pte Ltd Co. Reg. No. 201130598R SFP is regulated by the Monetary Authority of Singapore MAST. SFP holds an MAS Capital Market Services license for dealing in securities, units in collective investment schemes, exchange-traded derivatives contracts, OTC derivatives contracts, and spot foreign exchange contracts for leveraged foreign exchange trading, and is an MAS-exempt financial advisor. StoneX Financial HK Limited C. No. BCQ 152 SHK is regulated by the Hong Kong Securities and Futures Commission for dealing in securities and dealing in futures contracts. StoneX Financial Thai Limited SFA Akin 141774727 holds an Australian financial service license and is regulated by the Australian Securities and Investments Commission AFSL 345646. StoneX Securities Co. Limited SSJ Co. Reg. No. 010401047199 is regulated by the Japanese Financial Services Agency as a Type I financial instruments business operator. Kanto Local Finance Bureau FIBO No. 291 is a member of the Financial Futures Association of Japan for dealing and broking FX and FX option transactions, and is a member of the Japan Securities Dealers Association for dealing and broking stock indices and option transactions. No part of this material may be copied or duplicated in any form by any means or redistributed without the prior written consent of StoneX Group Inc. Copyright 2024 StoneX Group Inc. All rights reserved.